Welcome back to the final segment of Investing and Trading Live, sponsored by Online Trading Academy. My name is Josh Littlequist, and on the last segment, we were talking about different income strategies, whether you're in your working years or even during retirement. There are strategies to use options as an income strategy on top of your retirement account, whether that's a 401k, IRA. We're seeing a lot of people that are looking for a backup plan. There's a lot of layoffs going on. So having a backup plan, if that does happen, then you hopefully can rely on something and not just hope that you can live off unemployment. But the good thing is hopefully you don't get laid off. And then you have two potential sources to build that wealth bucket. We had a lot of people texting into that investing class that we do here locally. It's a free class to introduce you to these techniques and concepts that we're talking about here on the show today. Text the word investing to the number 210-210 for 2 seats for this class. Text investing to the number 210-210 right now. When you do that, you're going to receive 2 seats for this class. Most people bring their spouse or significant other. We're seeing a lot of people out right now that are bringing their children with as well because they don't teach this in school or college, high school or college. So make sure to bring that spouse or that child with you, immediate family member. And let's make this a couple hours family segment and learning how the financial markets actually work. Text investing to the number 210-210. So Al, in this last segment here, I want to talk through the different protection strategies for retirement accounts. You look at the last couple of years, especially in 2022, it was down from the day one, January 1st. I don't know if that was first or second the second or third when the market opened, but the first day of the month in January and the last day of the month, it never seen a positive day or a positive. It was never positive for the year, we'll say. So a lot of investors are struggling right now to build those retirement accounts, to have enough to retire and stay retired. So the number one key that we do here at Online Trading Academy is teach you how to protect what you have, because if you can't protect it, you can't grow it. So think of it as an insurance company that's protecting your life or your car or your home or whatever that may be. You always have insurance on stuff like that, but most people don't understand or know that there's strategies that act like an insurance policy for your retirement account. I want you to talk about how to protect those retirement accounts, and then we'll get into how to continue to grow those in any market condition.
Well, the interesting thing is you mentioned a lot of different insurance policies, life insurance, car insurance, home insurance. Let's talk about home insurance and car insurance. If you have insurance on your home and your car, do you know 100% you're going to need to use that insurance?
You don't know.
No, you don't know. If you have a portfolio, do you know 100% at some point in time it's going to go down in value?
Yeah.
Absolutely, 100%. Yet that's the one area that people don't have insurance. You can't buy an insurance policy from State Farm or Nationwide or any of the insurance companies, so don't bother calling them. But you can use options as an insurance policy. There is an option strategy that will go up in value as the underlying that it's associated with goes down in value. You don't even have to sell a position, a stock, for example, or stop losses, for example. You can't use a stop loss on a mutual fund. You can't use options on a mutual fund, but you can in a self-directed IRA on stocks and exchange-traded funds. Using stop losses is one of the major protective vehicles that people should use, but to use it properly, it starts with the right price to get into something. That's going to determine the quality of that stop loss.
Let's break that down for a little bit, because a lot of our listeners are probably saying, well, if I put a stop loss on, then I lose money. Think about it this way. If you have a mutual fund, there's no plan of gain or loss. So that loss, what happens, especially this last year, continues to get bigger and bigger and bigger. So as markets go against you, you want to take a small loss, no longer lose because you've protected that position. So that's the concept on why you would use a stop loss.
Yeah, and I'm going to say it this way. We teach people how to lose because no one is going to be 100%. So when you lose, you want to make sure it's not something that is going to have a real big impact on your portfolio or you mentally, psychologically. So that means you can only have a small loss. A small loss, if taken, can never become a big loss. So all these people that lost 20, 25, 30% this last year, at some point in time, they might have only been down 1 or 2% or maybe 5%. They could have protected themselves and not gone through that kind of a drawdown. You should never, if you're using the right strategy that includes a proper risk management strategy as part of it, you should never experience a loss like that. Small losses are going to be offset by small wins. And then what's left, if you get rid of the big losses, the big wins are left. And not that we want you to go out and your goal should be to just go for these home runs.
Yeah.
What you want to do is just learn how to do this in a way where you're consistent, and that's learning the process. If you can do this and you are profitable on a consistent basis, regardless of what the amount is, and you shouldn't even be concerned about that at first. Just learn the consistency. Then this becomes scalable, and you can add on to it.
Yeah, I think a lot of listeners that are listening right now may not have experienced this before, because they did so well from 2015, 16, 17, 18, 19, 20, 21. So they felt like the market only went up. I mean, talk to somebody that lost a lot of money in 2008. Talk to somebody that lost in 2000. So if that happened once, you can't afford to have that happen again.
Correct.
But why not eliminate that from happening to you ever? And that's what you got to do, is what you have. If you want to learn more about how to protect those portfolios, come into one of these investing classes about that, because I think it's really important to talk about how to protect those portfolios.
Well, I'll tell you why it's even more important now than ever before. Last year, if you lost money, you can't go back. You can't trade backwards and get that back. But what you can do is make sure you're protected going forward, and you have to be prepared. You have to be flexible and prepared to take advantage of whatever the markets are going to do. I know a lot of people listening are thinking, well, after a down market like that, a down year, the market's got to come back. But I want to just read some things to you. I don't want to depress people, because this is not depressing. It's just an opportunity to make money in a different direction. If you think the market's going to go up, some of the big players out there are going to disagree with that. Let's see here. I've got a number of articles here. Here's Marco Kolanovic. He's a J.P. Morgan analyst, one of the top analysts in the world. He's bracing for a minimum of a 10% correction in the first half of the year. He says fundamentals are deteriorating. The market's not currently pricing in a recession, which he thinks are going to come. That's J.P. Morgan. Morgan Stanley, Michael Wilson thinks that we could be looking at maybe a 20% or more drawdown. It's possible that the S&P 500 could go down to 3,000. It's trading right around 4,000 right now.
Yep.
That's a big dump. He thinks 25% isn't out of the question.
That is a big dump.
Goldman Sachs, they offer % plunge in the market if we go into a recession. Even if we don't go into recession, they're looking at maybe another 10%.
Boy, you're talking a lot.
Assets that we've been talking about, options, futures, Forex, they can be used to participate beneficially in a down market. But here's what the great thing about what's going to be coming down the road. Look at this as kind of a spring that's being compressed. The market may be going down. At some point in time, the hand's going to come off that spring and it's going to shoot upwards. So we're going to have, maybe even yet this year, maybe a big downside move and maybe a big upside move. But at some point in time, this market will come back, and it will come back strong. The further down it goes, the further up it's going to go when it comes back, and the stronger and quicker that will be. You need to be prepared to take advantage both directions.
Yep, and that's why you need to protect what you have, because if you don't protect it as it goes down, as that spring is compressing, you won't have any money to buy when it's actually cheap. This is the biggest opportunity, Al, that I think that we're going to ever see in our lifetime. If some of this stuff that they're saying, these talking heads, if that actually happens, huge opportunity for us investors if you're prepared ahead of time. Come into one of these classes that we do here locally, see how to use supply and demand as using facts in the market to make smart investing decisions. Core strategy, with that online trading academy has developed, is designed to follow the big institutions and not trade against them. Text right now one last set of tickets to give away here for this investing class. Text investing to the number 210 right now for 2 seats. That's text investing to 210 for 2 seats for a class and a financial quick start kit just for getting set up. Al, we've had a lot of things we talked about here today. Income strategies, wealth strategies, and you always have some great tips. Let's hear today's OTA. Tip of the week.
Well, successful people know that they're responsible for their life. No matter where you are right now, no matter, your starting point, your weaknesses, your past failures, but realizing that you're responsible for what happens, that can be a little scary, but it also should be exciting for you. You have the power to accomplish what you desire. And when you accept that fact, that becomes the only way you can be successful, because excuses are going to limit and prevent you from growing personally and professionally. So ask yourself this: are you willing to spend a little extra time now, like most people won't, so you can spend the better part of your life like most people can't?
That sounds a lot like Smokey the Bear. He said, only you can prevent forest fires. Only you can create your financial future. Do that now with one of these free investing classes. Text the word investing to the number 210-210. As always, same time, same place next week. Until then,